It's impairment of a cash generating unit. We are told yes, Siobhan fully owns a company called Harry. Extracts from Siobhan's statement of financial position relating to Harry are as follows. So they've given me goodwill, 90,000, franchise costs, which have been capitalized, 50,000, restored furniture at cost, 90,000, buildings, 100,000, other net assets, 50,000, giving me 370,000 as the carrying value. The books are showing that our total assets of our cash generating unit are worth 370,000. The restored furniture has an estimated realizable value of $115 million. The franchise agreement contains a sellback clause, which allows Harry to seize using the franchise and receive a repayment of $30 million from the franchisor. An impairment review at 31st March 2015 has estimated that the value of Harry as a going concern is only $250 million. Demonstrate how the impairment would be accounted for in the financial statements. Now, ladies and gentlemen, how many of us are capable of doing this simple question? How many of us are capable of doing this simple question? For 7 marks, 7 marks, how many of us can do? Why for yes and for no, for us to know how to progress. For us to know how to progress very fast. If you can, you simply tell us yes, Y, or N for no, and then I'll be able to know what to do. No, very many. I've not seen a single yes. I haven't seen a single yes. Okay, so let me do it very fast. The first thing that you do, should you get a question of impairment, the first thing that you should do, ladies and gentlemen, is to copy that table the way it is. So could you kindly copy, you simply copy the table the way it is. You simply copy the table the way it is. That is the first thing we do. So copy that table the way it is. I'm copying mine very fast. I can see goodwill. You copy it the way it is. So I can see goodwill. So goodwill is 90,000. Goodwill is 90,000. I can see franchise cost. Franchise cost is 50,000. Franchise cost is 50,000. We have restored furniture. Restored furniture, ladies and gentlemen, here is 100. No. Started with 90, 50, 90. Furniture is 90,000. 90,000. And then we are given here buildings of 100,000. Buildings of 100,000. Buildings of 100,000. And then we have other net assets. So other net assets, ladies and gentlemen, other net assets, we have 50,000, giving us a total of what here? A total of 370,000. A total of 370,000. So that is the first thing that you do. You simply copy the table the way it is. Now, after you do that, could you kindly go ahead and give me the total impairment? The total impairment. Go ahead and give me the impairment loss. The impairment loss. The impairment loss, ladies and gentlemen, remember, they have told us that in this case here, the total value, the total recoverable value from the entire cash generating unit is 250,000. 250,000. 250,000 is what we are going to do. What here, somebody, is what we are going to get. Should we decide to sell this company called whatever, this cash generating unit, we can only recover how much? 250,000. And you can see in terms of the books, the book value, the net book value, the carrying value is 370,000. The carrying value is 370,000. Of course, I want the magnitude of this. I don't take it as a negative because I've written here the word loss. So we are able to recover, and I hope you guys took a snapshot of the question. We are able, if you look at the market value, we are told here that an impairment review at 31st March 2015 has estimated the value of Harry as a going concern as only 250, but you are carrying this to 50 million. But you are carrying this, ladies and gentlemen, this entire Harry company at 370,000. 370,000. So, ladies and gentlemen, then this gives me how much? This gives me how much here, somebody? The impairment loss is how much? The impairment loss is how much? The impairment loss is how much? You can see in this case here, our assets, total assets, group assets, 120, yes, 120,000. Thank you very much, 120,000. Now, this 120,000 impairment loss is to be distributed to these assets following some criteria. Which criteria? Who is able to remember those three major concepts of impairment of a cash generating unit when we have got various assets? Who is able to remember those three items? That first, we start by allocating these to which assets? First, we start allocating these. So the first allocation will go to specific assets. Specific assets, those assets whose impairment value you cannot goodwill. Not goodwill. First of all, we start with specific assets. You start with specific assets. And then number two, you will go straight away ahead and now impair what here? Goodwill. And then now number three, we have the remaining assets in pro rata basis. On pro rata basis. So first of all, you start with not intangible per se. You start with those assets that you are able to pinpoint and say, hey, this one has lost this much. So from the question given here, would want first of all to identify those specific assets. Are you able to see those specific assets? I'm so sure. Yeah, somebody has already identified one. Somebody is telling us that, ladies and gentlemen, that there is an impairment in furniture. If you look at our book value, furniture is being carried at 90,000. But during our impairment review process, we realized that furniture has even a higher value than the book value. So if it has a higher value than the book value, the question is, has it been impaired? If the realizable value is more, has it been impaired? Remember, we talk of impairment loss when the recoverable amount, what you're able to recover from your asset, is less than the book value. So actually here, ladies and gentlemen, what happened is that our furniture's value went up. But remember, when you're doing impairment review, you don't have that permission to go to your books and adjust figures upwards. And the impairment loss model, we always adjust figures what here downwards. Here for impairment review process, the only thing we can come and say is that in this case, ladies and gentlemen, we have our impairment loss here distributed. Our impairment loss will be distributed here. Remember, the total impairment is 120,000. So, and we are saying that furniture was not impaired at all. So these are now the new values that we shall take to our financial statement. Furniture was not impaired. There is no impairment loss you can give to an asset whose value has gone up. So in this case here, furniture, no impairment at all. So the new value there will be 90,000. This minus the loss. Any other asset, any other specific asset that this examiner, any other franchise, okay, he's saying franchise. Let's see what happened with franchise. So franchise, we are told, the franchise agreement contains a sell-back clause, which allows Harry to cease using the franchise and receive a repayment of how much here? Of 30 million. Meaning, ladies and gentlemen, that this franchise of ours as an asset, we can only recover 30. Should things go wrong right now, we can only recover 30,000. Remember, the figures are supposed to be in thousands, so we must read them in terms of thousands. So the recoverable amount of this franchise asset is only 30,000. 30,000. So, ladies and gentlemen, listen to me very well. Under the new value of this franchise cost, I'll only be able to realize 30,000. Meaning that the franchise cost asset has lost how much? Somebody has lost how much here? Somebody has lost 20,000. Has lost 20,000. Has lost 20,000 for us to be able to get what here? Somebody 50,000 minus 20 is now what will give us what here? Will give us 30,000. Because remember, impairment is all about recoverability. How much are we able to recover? You can't carry an asset at this amount and you can only recover how much? 30,000. Here recoverable is lower, meaning that the difference is what here somebody is an impairment loss. Now, ladies and gentlemen, from there now we are good to go. We have cleared working with specific what here assets. Yes. Right. So now we can go straight out to the second step, where now we distribute, we allocate some impairment loss to goodwill. So in this case here, what is the unallocated impairment loss? The unallocated impairment loss in total is how much here, somebody? Unallocated impairment loss is 100,000. And unfortunately, the goodwill that we have here will be able to absorb most of it. So in this case here, out of these 100,000 unallocated, come and allocate in most of this impairment. Actually, the goodwill that we have there will be absorbed, will be, in this case here, taken care of 100%. So 90,000 of the impairment loss will go to goodwill, meaning that at the end of the day, in your books of accounts, we should not get to see any goodwill. We should not get to see any goodwill. Now, ladies and gentlemen, after now, finishing with this goodwill, now we go to step number 3. Do we have any remaining assets? Do we have any assets other than the 2 which are remaining? Yes, I can see buildings and the other net assets. Now, the next thing I need to ask myself is, do I have any unallocated impairment loss? Or have we been able to allocate everything? Do we have any unallocated impairment loss? Loci tells me 10,000. Loci tells me 10,000. 10,000. 10,000. 10,000. 10,000. Thank you very much. So then what do we do with this 10,000? What do we do with this 10,000? What do we do with this 10,000? We have to allocate the 10,000 to the remaining assets. Using which criteria? Pro rata. Pro rata. So then could you kindly tell me, ladies and gentlemen, how much will go to the buildings? 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 Pro rata basis. Remember now you need like a clean, thank you very much, B. Remember now you need like a clean, working. A clean working where you'll take care of, in this case here, these other net assets. A clean working where we'll come and take care of these other assets. So we have buildings. So the buildings, in this case here, we have 100,000. And then we have the other net assets, other net assets, 50,000. So these ones are the ones that I would want to use their fractions. So then the total is 150,000. 150,000. Right? So meaning that the buildings will take 100 over 150. Other assets will take 50 over 150 times the impairment, the unallocated impairment loss of 10,000. The unallocated impairment loss of 10,000. Of course, these are 100,000 over 150,000. Yeah. So could you kindly give me these figures now? Building will take up how much? Building will take up how much? Building will take up how much? Building 30, building will take more. Building will take more. 66. Building will take more because it's 100 over 150. 100 over 166, 67. Thank you very much. 66, 67, like that. And then now the other net assets will take 33, 33 like that. So could you kindly give me the new values, which now I will take to my, thank you very much, which I'll take to my financial statements. So these are the values which I'll take to my statement of financial water position. So according to B, this one here will be 93,333. How about other net assets? 46, 67, 46, 667, like that. So please give me the total new assets and confirm that this will add in this case here to us 250,000. So that now this minus this gives me this, like that. So unfortunately, most of us came towards the tail end of this question. It's an easy question. I can't repeat it. The very best, of course, is to share with you the video, which you should be able to watch tonight. So msikose kuangalia hii concept ya cash generating unit. Cash generating unit. I'm surprised ni kama mko mmefanya kwa class kweli. Mlifanya mkasahau au namna gani hii concept? Hamkufanya? JK anasema hawakufanya. Are you sure? Joined late. Are you sure mkufanya? Are you sure mkufanya? Are you sure mkufanya? Aha. Some of us joined late. Very good. Very good. Very good. Very good. No problem. No problem. We shall do what here? We shall overcome. We shall overcome. We shall overcome. Now, before I go to my today's topic, there are things that I would want us to put straight. There are things that I would want us to put straight. There are things that I would want us to put straight. You know, there are questions. Total, according to Kate, the total is 260,000. Is that true, really? Kate tells me that the total is supposed to be 260,000. If it is 260, then one of these figures must be wrong. One of the figures here must be wrong. One of the figures must be wrong. Which figure is that? Which figure is that? If it is 260, 260, 260. If it is 260, if it is 260, one of your figures, if it is 260, the value of Harry as a going concern is 250,000. 250,000, 250,000, 250,000. Is there any figure that you are able to see for building and other net assets? Is there any figure you are able to see? Carrying amount totals 380. Or the carrying amount is 380. Eh? I'm told that the carrying amount is 380. The carrying amount I'm being told is 380. Just check. The carrying amount is 380. Just check. The carrying amount I'm being told is 380. 380. 380. The carrying amount I'm being told is 380. Just check very fast. Check very fast. The carrying amount I'm being told is 380. Is that true? The carrying amount is 380. So everything then remains the same. So 380 minus 120. So this becomes what here? 260. Thank you very much. That becomes 260. Now, for those of you who did advanced financial reporting last semester, yeah, it's good to tell us the truth. If you counted the theory marks, how many marks did the theory questions have? Last semester theory questions, zilikuwa na marks ngapi? Pata potea. Before I start on my main thing, there are things we have to discuss. Anybody who did last semester's exam, please very fast respond. The theory questions zilikuwa na marks ngapi? The theory question, we have just started. Theory questions zilikuwa na marks ngapi? 40 marks. 40 marks. Na zote uzuri huwa zina oscillate around the same things. Integrated reporting, social responsibility, IPSAS, etc. 40. B3 it was not 20. Zinaweza kwenda juu sana siku hizi. Zinaweza kwenda juu sana. Tunasema AFR ni over 30. Over 30. Now, ladies and gentlemen, on that note, I would want us to look at May 2017, question number 4A. May 2017, question number 4A. May 2017, question number 4A. As a teaser, as we wait for other students here to come. As a teaser, May 2017, question number 4A. The management commentary, management discussion analysis provides this page number 130, page 130, page number 130, page number 130, the management commentary, management discussions analysis, what we call MDA, provides users with integrated information that provides a context for the related financial statements. Discuss 3 contents of management commentary in the entity's financial statements. In the entity's financial statements. So management discussions of the financial statements, there are those things, ladies and gentlemen, that you must always portray, that you must always disclose in your notes. What are we talking about, somebody? What are we talking about, somebody? Please advise Seraphine to enter using audio, to enter the meeting using audio. Evan says, future outlook, nature of the business, nature of the business, nature of the business, nature of the business, nature of the business. Actually, the first thing is to give us the nature of the business. Tell us the kind of products, in this case here, you're offering, right? Right? So you give us like a background of your business, including what here, what we call the business model. How are you able to make your profits? Like now, most banks are at pains to explain in this case here how they were able to make abnormal profits in this particular corona period. Remember last year, things were very bad. But when I try to look at, for example, KCB's financial statements very well, you'll be able to see that these guys are auctioned so many properties of people during this time around, right? So in this case here, you must give us the nature of the business. You give us a description of the business carried out, and if possible, ladies and gentlemen, you must give us what here, you must give us the business model. And then number 2, very, very importantly, you must give us the basis of measuring your performance, the KPIs, the key performance indicators. That is very key, and that should come always at the top. After the nature of the business, give us the key KPIs, the performance what here, the performance metrics. Very, very important. Very, very important. From there, ladies and gentlemen, you must give us a whole page covering the risks. The risks. If this will go like this, then we'll be able to make losses. Risks, you must have, ladies and gentlemen, a whole page where you describe what here, risks. We need to see now results and the prospects, results and prospects, results and prospects, results and prospects, right? And remember when you're discussing about risks, if you can recall very well, when you're discussing about risks, we normally prefer you to make use of what here, the Pestel model. Pestel model tell us in this case here how politics will affect affected you. The econometric model or other measures here, technological, etc., risk like that, right? So come and give us the results and what here, prospect, somebody spoke of future, what here, future outlook. Ladies and gentlemen, we need another page where you talk about what here, resource mobilization, and allocation, very, very important. So this is what we call the management discussions and what here, analysis. Management discussions and analysis. Ladies and gentlemen, this is a big thing. Remember, if you have been on the lookout for the last 1 week, like now today, was it today or yesterday? EABL is among the first institutions to prepare reports on the basis of what here, sustainability. They've been able to prepare sustainability reports. Yeah, they were there in the papers today, so it must have happened yesterday. So these are things you need to keep on looking at. So when you talk of MDA, these are emerging issues, very important things that we have to look at. Very good. Now, ladies and gentlemen, how about December 2017, question 1? December 2017, question number 1. December 2017, question number 1. Explain 3. Yeah, somebody says he saw the one of EABL on the standard years. On the standard years. Explain 3 benefits of integrated reporting to both an organization and the users of financial statements. Benefits of IR, integrated reporting. So before you tell me the benefits of integrated reporting, could you kindly tell me what do you understand by this term, integrated reporting? Integrated reporting. Integrated reporting. To integrate is to put together. We are looking beyond, we are looking at this performance beyond the numbers, beyond the numbers. So when you talk of integrated reporting, we are looking at, no, before first of all I give you the answer, I would want to look at contains all components of financial reporting. B, I'll not give you a mark for that. I'm waiting. Who will be able to give me what is this integrated reporting? Quality and the quantitative aspects in the books, I like that. But this is a blend. When we talk of integrated report, this is a blend between who and who. Qualitative aspects and what are quantitative aspects. I like that. I like that. But we are not yet there. We are not yet there. I'm still waiting for somebody to give me people, profit, and the planet, the three P's, non-financials, and financial information. Ladies and gentlemen, remember, under integrated reports, I expect to see three key things. I expect to see your annual financial statements. I expect to see your sustainability what-year reports. And then I expect to see number 3, your governance structure and reports. So 3 things: profit, number 2, your sustainability, right? Not profit, but financial statements, profit, statement of financial position, etc., cash flows, etc. So I expect to see your financial statement. I expect to see your sustainability report. I expect to see your governance what-year governance report. So we're fusing the 3 to give us what we call an integrated report through what Lokai is calling the 3 P's model, the 3 P's model. So the 3 P's model that you're required to come and report on your profits, basically, right? You're supposed to tell us something about people. You're supposed to come and tell us something about what is the planet. And when you're talking of planet, of course, that is where the concept of sustainability reports comes in. But when you discuss, ladies and gentlemen, this integrated reporting, remember, other than you saying that we must have these financial statements, sustainability reports, governance reports, other than you giving us this concept of the 3 P's, you must always remember to tell us that integrated reports is both what here short-termism model and long-termism model. Short-termism, why? It is looking at the financials. It is looking at the income statement, which in this case here would want to see a company's profits growing. You know, when your company's profits growing every other day, it means that there is something wrong. Remember, profits is the greedy metric. It is only a metric that the shareholders are after. So they would go slow on trainings. They'll say trainings cost to reduce quality. They would even want to make sure that the profit goes up. So it will always be looking at these short-term parameters and, of course, long-term. When you talk of sustainability, like the other day, you saw this company called the BAT, this which makes bad stuff, cigarettes. They were number 1 in terms of what year? Carbon emissions, right? In terms of what year? Environmental issues. They were rated number 1. They got a very big trophy for that, right? Because they are looking at, if, for example, we're going to have this global warming rate increasing by the day, how will they be able to get their tobacco, right? So they have to be at the forefront of ensuring that we are planting trees, that we are protecting our rivers. We are always looking at, for example, these peaks of our biggest mountains to ensure that we have got enough vegetation cover. Otherwise, their business will never be there in the long term. So when you talk of integrated reporting, you said you must say it's the only model that looks at short term and what year long term. And as somebody told us, it looks at both quantitative and qualitative aspects. Quantitative and qualitative what year aspects. Now, somebody is telling me to explain sustainability report. Sustainability report, ladies and gentlemen, looks at what? It looks at people. How good are you to your employees? Like I always keep on repeating often, ladies and gentlemen, a company like Safaricom, it's breaking in billions, but we get some people in Safaricom being paid 40,000, 60,000, 80,000 accountants there. Is that ethical? Is that ethical? Is that a model that is sustainable? Is it a model which is sustainable? That is why if you go there, you'll always get, in this case here, very high labor turnover. So when you talk of sustainability reports, we are looking at how do we ensure that our farm's longevity is guaranteed, right? Very, very important for us to appreciate that. So we are saying that in terms of sustainability reports, we are combining environmental issues, social issues, etc., so that our farms going concern will not be in doubt in the near future. Now we go back to our question. The question was about benefits of integrated reporting. Benefits. Could you kindly give me any two benefits of integrated reporting? Any two? Kindly give me any two benefits of integrated reporting. Very good. Karaoke tells me boosts investor confidence. Once investors start seeing you guys talking about the environment, once in this case here, the company or other stakeholders start seeing that you guys are saying that you have gone green, the confidence, of course, their confidence in the company will be boosted, yes. So of course, once the company's investors have, ladies and gentlemen, trust in the company, as Winnie tells us, the shareholders here will invest in the company. Kibet has knocked it where it deserves. Kibet amesema concept of brand, what you are building. Brand building, when you come and say these are our employees and people are able to know that our employees are earning very well, that is okay. Dorka says that when you are doing this integrated reporting, ladies and gentlemen, it will help in terms of reducing the expectations, what here, gap. Expectations gap. Let these people in the AGM, when you are reading financial statements for them, let them get to see that we were not able to make these profits because we had to take some money to the environment. We have to take some money here. We have to pay our workers well. So in this case, ladies and gentlemen, that lady is right, that this integrated report helps in reduction of the expectations gap. What are the shareholders expecting us to do, right? So we will be able to put all the stakeholders on the same table together very easily. And then I've seen another student also coming up with a very good point that integrated reports will always help us to link between our financials. Our financials will always help us to come up with relationships between our financials and the qualitative metrics here. So we're able to relate things. We're able to link up things. We're able to link up things. Better understanding of financial and financial performance. I like B3. Link between financial and non-financial metrics. That is okay. Focuses not just on the short term. I mean, B should get a present. Focuses not just on the short term results, but also puts to consideration the future results. Better understanding over the business as it covers both financials and what year non-financials. Sio lazima tuongee kuhusu mingi sana. Now, ukiangalia November 2015 question number 2A, before I go now to the gist of the question, the gist of the class, November 2015 question number 2A, November 2015 question number 2A, and I'll not do quite a lot in this because I can see you guys are very good in this. It's like you had done this in class. You must have done this in class, isn't it? You must have done this in class, true? Please, I would want to see yes or no. Oh, watch my video. Yeah, those videos are on YouTube, right? Hizi zinakuja kwa exam. Tuzipitie haraka haraka basi. Kama mko mmefanya, tuzipitie haraka haraka. Hizi zinakuja kwa exam. So November 2015, question number 2A, we are told integrated reporting is aimed at promoting a more cohesive and efficient approach to corporate reporting. It serves to improve the quality of information available to providers of financial capital to enable a more efficient and productive allocation of capital. With reference to the above statement, highlight 6 content elements that an integrated report should contain. Anthony, my friend, It's page number 131. Page number 131. Page number 131. Alafu unajua ukiwa mwanafunzi mwerevu unajuanga hivi vitu za MDA, integrated reports, ni kama zinafanana. Ni kama zinafanana sana. Ni kama zinafanana sana. Ni kama zinafanana sana. Because nowadays, hata kama uja adopt integrated reporting, which is a big thing in the corporate world nowadays, as managers, mnaambiwa mwanze kuandika notes as per what this IR model, because they expect firms like Rwanda, all listed companies at the Rwanda Stock Exchange have gone the integrated way. South Africa the same. Kenya, of course, should be able to follow the suit because Kenya is an economic hub in East Africa. We don't want to be left behind. So components of integrated reporting, na ngoja muniambie. Governance structure, financial performance, business model must be there. Risks and opportunities. You go there and give us a very good statement using pastel, using SWOT, risks and opportunities. Good statement. Good statement. Strategy and resource allocation. I like that. Strategy and resource allocation. Don't forget the major thing, which is what here, the performance, isn't it? Performance. You must give us the financial statement in integrated reporting, right? Don't forget, ladies and gentlemen, the concept of governance. Governance. Future outlook must be discussed here because we've said something to do with sustainability, reports. Ya mwisho kabisa kwa hii ni May 2014 question 5C. Yes, business models, yes. Risk, opportunity, outlook, strategy. Somebody is giving us a very good model there. Those are the things I like. I wish I could get even that in full on my WhatsApp. I have a look at it later. Great. Are we on May 2014 question number 5C? Nyinyi kama mko mnasoma hizi kusema ukweli, mlikuwa mnasoma nini? Unajua hata wakati unasoma, inafaa unaomba Mwenyezi Mungu akupatie macho ya kuona sawa sawa. Some offside. Kwa unajua football. Offside ni anaotea. Very good. So we are told here, May 2014 question 5C, discuss any two components of an integrated what here? Of an integrated report. Unajua sasa hapo utapata mwanafunzi jika ni uwerevu, ataambiwa discuss, yana list tu, anasema financial statements, that's about what here sample discussion. So if it's financial statements, we expect we took time on group, we want 20 minutes, I want to believe the gentleman or the lady here is saying that we should do this revision like 20 minutes. No problem. So hiyo part 1 at least nimekupatia idea, unaweza kaenda ukaisoma peke yako later. Roman 2, explain 4 guiding principles that underpin the preparation of an integrated report. Or 20 marks, okay. That is very risky. When you go to a group question, don't go for all the marks za group. Ukienda for all the marks za group, utaanguka AFR. Nitakufunza tena next semester. Makosa sana hiyo. Don't go for all the marks za group. Don't go for all the marks za groups. Ataweza uanze kutafuta retained earnings account? No. Group accounts, just get like 12 out of 20 and then you save on time. Any group accounting question yako hapo ikupoteza time, ufanye kitu na 1.5 hours. Na uache maswali zingine rahisi. Right? Ikina guza unachukua hii unaweka like that na move, because FR it's all about how you manage what your time. It's not about how good you are in one question. Wanarumia wanafunzi likiwa ni vigilator unapata Kuna fuzi ameshinda kwa hiyo group, anapiga mati, at the end of the day anaanguka, anasema amerogwa. Hakuna kurogwa hii dunia. Wewe ndio utajua maneno. Great. So guiding principles underpinning the preparation. Hii amjaniambia. What principles, ladies and gentlemen? What principles? Very easy principles. Number one, it's all about stakeholders inclusivity. We don't want this situation where we only look at one stakeholder, the shareholder profits only. No, it has got to be everybody. There are so many people, there are so many stakeholders that have to play a ball for this company to stand up and be where it is. There is a surrounding community, right? Children there, we have to provide schools for them. So in this case, here, stakeholder inclusivity, and that is why under integrated reporting, you are required to come up with a stakeholders mapping. You must give us the stakeholders mapping using what we call Mendelov model, very important model, Mendelow's model. You must map them. You must know who are the key stakeholders. You must come up with a full report on the stakeholders. So stakeholder inclusivity, I like that. There is something that these students are, ladies and gentlemen, forgetting, the concept of future outlook. Future outlook is a key thing for me. I never saw anybody here mentioning a future outlook. Did I see anybody saying future outlook? That's a key. That is something that is key. That's a key principle. I did mention future outlook. So that is a very important thing. And then, of course, we have the concept of a strategic focus. Strategic focus. And then, of course, now we have the issues of the financial statements, reliability, those things, reliability, conciseness, right? Materiality, etc. Very, very important, like that. I can see another one there, connectivity of what here? Of information. Connectivity of information. You see, like now in December 2012, they asked us a very simple question. Explain what integrated reporting entails. Explain what integrated reporting entails. Tupatana na swali kama hiyo kesho. Tena kunyorosha tena. Explain what integrated reporting entails. Wamenyamaza. Mimi najua kinyamaza hivyo wamenyoroshwa. Mimi najua kinyamaza hivyo wamenyoroshwa. Sustainability, so Of course, it is the same as components, but here they want an explanation. So you need to know how to fuse the three. Talk about the things that I told you, this thing of future outlook, right? That you're combining qualitative and what here? Quantitative performance to be able to provide performance of an entity in a balanced way, right? It is an instrument that looks at all the stakeholders, in this case here being included, right? And then now you come and talk of the sustainability, trying to ensure that this company is going concern will not be in threat in the near future, etc. You menajua ushakamata kiasi. Aya. Tuangalie May 2017, question number 2A and B. May 2017, question number 2A and B. May 2017, question, yes. May 2017, question 2, A and B. I like that. A and B. Wanasema, page number 136. Are we there? Page number 136, 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 are we there? Page number 136. Tuko hapo ama hatuko hapo? At times, some of these things could look a little bit complicated, but trust you me, they are very easy. They are very easy. Very easy. Very easy. They are very easy. It's May 2017, question number 2A. Question number 2A. May 2017, Question number 2A, May 2017. Question number 2A and B, yes. Question 2A and B. My camera has a small issue, which I have to correct first. Question number 2A and B. Okay, so we are told there to explain the accounting treatment of embedded derivatives under IFRS 9, financial instruments, IFRS 9. So first of all, what is an embedded derivative? 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 What's an embedded derivative? Is there anybody who could be knowing what an embedded derivative is? Aha. To embed is to combine. Kama kuwekelea chapati. Right? Combine both derivatives and a non-derivative. Aha. Nangoja kidogo. To embed, to be in bed with. To embed. Ladies and gentlemen, as Eric is telling us, an embedded derivative is also known as a hybrid derivative or a compound derivative. It's called an embedded derivative. It's also called a hybrid, or what here somebody, a compound derivative. And in most cases, ladies and gentlemen, this hybrid will be having basically debt and the equity components sandwiched together, put together, of which in this case here, IFRS 9 financial instruments tells us always to do what? To separate the two, get the equity component out of what here? The debt component. So we are told there, if you have this revision kit for purpose of moving fast, we are told an embedded derivative is a derivative instrument that is combined with a non-derivative host contract with a derivative component. So for example, a put option on an equity instrument. Example is a 4-year redeemable bond that states part of its redemption price with based on the increase in stock exchange index. The embedded instrument should be separated from the contract and accounted for as a derivative. If it is impossible to separate, the entire hybrid instrument should be treated as a financial instrument held at fair value through profit or loss. Now, for us to be able to understand this thing very well, I'm so sure you must have encountered this. I'm so sure you must have done this. Perhaps I need to look for a small question of ACCA. We see how it goes for you to be able to understand this concept of embedded derivative very well. And as I get this question, the most important thing, ladies and gentlemen, that you have understood is that embedded derivatives are what here? Compound derivatives, right? Compound derivatives. So we are combining the two. And at the end of the day, what the standard tells us is that we should split the two. And in the event we are not able to split the two, then the whole of it should be accounted for as a financial instrument through what we call P and L. You know, we have got through P and L and through OCI. You guys must have heard of these things. Now, there are those derivatives which go through the profit and loss, and then there are those derivatives which go through other comprehensive incomes. Is that a language that we are used to, or it's something that is quite new to us? Is it a language which are used to, or it's something that is quite new to us? Profit through OCI, don't worry. The most important thing vile bia alituambia ni kusonga mbele, ushasikia hiyo language kidogo. Ushasikia language kidogo, sasa inabidi wewe mwenyewe ukitumia language ya nevertheless, however, moreover, ujitetee. Now, part B, or through amortized cost. Thank you very much. Great. B, distinguish between fair value hedge and a cash flow hedge, citing accounting treatment of each. Distinguish between a fair value hedge, the one that keeps on, in this case here, having its market value changing often. So distinguish between a fair value hedge and a cash flow hedge. Utasema namna gani pata potea? Pata potea utasema namna gani ukipata swali kama hiyo? Nimeanza kusikia wanafunzi wameanza kunyamaza sana. Wanafunzi wameanza kunyamaza sana. Fair value hedge. It is the first difference. So could you kindly define that for us? Yes. So cash flow hedges against receipts and payments in the future. I like that. Hedge against effects of change on fair value. I like what B is telling me. Hedge against effects of change on fair value. Fair value. But I would not want, as this market, ladies and gentlemen, keeps on, as this market keeps on changing. You guys are very bright. I even think you're wasting time here. You guys are very bright. You guys are very bright. So in this case, ladies and gentlemen, we are being told here that a fair value hedge, in this case here, we are going to protect ourselves. To hedge is to protect ourselves from changes of market values of what here? Assets here, of assets. For those students that I'm teaching financial management, a fair value hedge is like a forward contract. Is a forward what here? Is a forward contract. Where, for example, we know that the value of $1 will keep on changing depending on the market values. And because, ladies and gentlemen, we don't want those changes here to really be worrying us, what do? We will go ahead and lock up a price. A fair value hedge. Like this fair value hedge is what, in this case here, KQ did in its derivatives hedge, in its oil derivatives hedge, which was a very bad thing that they entered in. Of course, it's a good model, but what killed it is corruption. So you see, those days oil used to fluctuate price. Even now, oil of price used to fluctuate quite a lot. So they went ahead and introduced what we call a fair value hedge. I can see JK has given us a very good in fair value of assets and liabilities. Cash flow is with cash inflow and outflow relating with what here? Assets and what here? Liabilities. Look at, for example, ladies and gentlemen, what Dorcas has told us there. Cash flow hedge, exposure or variation in cash flows. B had also given us some very important. B alikuja akasema kuna mali B aliongea. Juliet akasema hedge against variability in what year? In variability in cash flows. hedge against variability in cash flows. That is the one that I would want you to take here, Juliet Achieng. Juliet Achieng, anasema cash flow hedge is a hedge against, but I try to avoid the word that they have told you to describe. So we want to protect our farm against who? Variability in cash flows. In cash flows. So when you talk of cash flow, when you talk of cash flow hedge, for those students that I teach financial management, here basically we are looking at swaps. Swaps between interest rates, and of course currency. Currency, what we call currency, what here? Currency swaps. What we call the currency swaps. What we call the currency swaps. Right? So, ladies and gentlemen, remember, whenever you enter into these contracts and you happen to be making profits, simply accounting for this will be taken to where whatever profit you realize. Unasema tu take those profits through what year profit and loss. Hata usifike hapo. Wewe kwa hiyo definition, ukifika hiyo definition mara tumefika hapo peke yake, wewe waachana nayo. Nimekuambia AFR is not about getting everything. AFR is about survival. AFR is about survival. I remember during my times when I was doing advanced financial reporting, ACCA, globally, I got a recognition. And for my case, apart from the days I started teaching, I don't go balancing any question. I can never want to balance. The kind of amount of time will be required here to balance a question is big. Why would I want to waste time to balance a question and there are so many questions waiting for me around there? Perhaps in the course of time I'll come to think about balancing. These people mark entries. They mark entries like that. Very good. So hiyo najua mngepata peke yenu. Sawa sawa, tuko pamoja ama niko peke yangu? Tuko pamoja ama niko peke yangu? Tuko pamoja? Tuko pamoja kweli ama niko peke yangu? Tuko pamoja kweli ama niko peke yangu? Thank you very much. Sasa tuangalie November 2015 question number 4A. Tano tena. November 2015 question number 4A. November 2015 question number 4A. November 2015 question number 4A. Question number 4A. Question number 4A. Question number 4A. How I wish wanafunzi wa AFM wanaweza kukubali tufanye AFM asubuhi kesho ndio tuendelee na AFR hata paka saa 4. How I wish. Wanaweza kubali kweli? Because there is quite a lot we can discuss. We want to discuss really. There's quite a lot. Watakubali? Are you sure? Nyinyi wanafunzi wa AFM? Asubuhi ya saa 10. Tuendelee asubuhi ya saa Sema kama 9, if I can go with you up to around 9:30 AFR, I'm so sure nitakuwa nimewaacha mahali pazuri sana. Veni amesema no please. Hapo nitakuwa na vita Hapo nitakuwa na vita. Lakini AFR ni Friday, right? AFR mnafanya AFR lini? AFR mnafanya lini? AFR mnafanya AFR lini? AFR mnafanya AFR lini? Friday. Then no need. Tuendelee ile tunaweza tufanye pia AFM. Tusilete confusion. Sawa. Tusilete confusion. Sasa wanasema November 2015 question 4A, in the context of IAS 38, intangible assets, discuss the accounting treatment of brands in an entity's books of accounts. Ladies and gentlemen, these brands, remember there are those brands that you create internally. And there are those brands that, of course, in this case here, you purchase. External brands, internal brands. How do we account for them? IAS 38. Alafu hiyo maswali ni rahisi. Hebu niandikie hapo answer yake. Wamesema page number 139, November 2015, question number 4A. Let me be very serious because I've realized I'm recording, right? I'm recording. Let me not really, we are recording. So we're not now answering the questions we're giving, asking there. Let's ask those questions after the class is over. After I stop recording now, we have to be very serious. So you're told here, in the context of IAS 38 intangible assets, discuss the accounting treatment of brands in an entity's books of what year? Accounts. In an entity's books of accounts. Nangoja mnipatie answer jameni. Jameni, nangoja mnipatie answers. Durikas anasema intangible assets in the statement of financial position. Durikas itakupatia marks ngapi? Asante kwa kuniambia, lakini itakupatia marks ngapi? Eric anasema internally generated brands should never. Internally generated brands. Roja. Eric anasema any brand you generate from internally, slowly una grow, unaanza kuwa brand, should never be recognized as intangible assets. And that is the thing. Right? Loke anasema we only account for externally generated or what we call acquired brands. If, for example, RCM was to buy Strathmore, which is a big brand, then automatically that will have to be recognized in my SO statement of financial position. So internally generated the brands as per IAS 38, ladies and gentlemen, they can never be recognized as intangible assets. So those ones, of course, if you can't recognize them as intangible assets and then you take them to your balance sheet, it means you will be able to expense them in the statement of what year incomes. How about acquired brands? Acquired brands, ladies and gentlemen, at first, they're recognized at what year? Cost. At cost. The cost we incurred if you bought Strathmore for $10 million, for example. So initially we record that at a cost. The cost you incurred. And then, ladies and gentlemen, as B is asking there, subsequently, of course, do we expect those brands to sit there down? We expect them to keep on fluctuating. So revaluation model will have to be applied. You must revalue your brands now, acquired brands, subsequently, every other time. And of course, at the end of the day, amortization, yes, amortized cost, very, very important. So you amortize, but again, you must always keep on bringing in valuers to revalue. Very good. Ladies and gentlemen, there is this question hapa ambayo inauliza mzuri sana. Hii ni yenu kusema ukweli. Distinction between a provision and a contingent liability. Distinguish between a provision and a contingent liability as I take you to the next level. Distinguish between a provision and a contingent liability. Tafadhali, naweza nikakosa time ya kuwaonyesha hizi maneno, lakini kuna vitu ufai kuassume. Ona topic kama ya related party transaction, very easy topic. It can save you. Related party. Sio mlikuwa mmeshafanya kwa darasa ni ku-review tu related party. Mlikuwa mmeshafanya ama mlikuwa mmefanya related party transactions? Related party mlikuwa mmefanya, most of them ni about disclosure. Hamkuwa mmefanya. Eric anasema yes, bado. I'll know what to do. Don't worry, I'll know what to do. Lakini kwa sasa ni define tafadhali hizo ma provisions, ni define contingent what year liability. Karaoke anasema breaking news. Ni gani hizo karaoke? That exams have been postponed. in case of breaking news regarding so contingent liability is a liability that will fall due as a consequence of some future event, like a court battle, a court case. Contingent liability arises as a result of expected future occurrence. Already the party in breaking news. Iko kwa past paper yako karaoke. Iko past paper yako kabisa Aurelia. Iko kwa past paper yako mara mingi sana, hata si mara moja. Mara mingi sana. Sio mara moja. Provision is a liability of uncertain timing or amount which can either be legal or constructive. Very good. Hiyo mimi nimewaachia. Mimi nimesha mention, mimi nimewaachia. So kitu ambacho ningetaka tuangalie before niweze kwenda kwa foreign subsidiary ambao kila mtu anaimba lakini mimi si tarajii sana. Kila mtu anakuja anasema foreign. Ebu tuangalie kwanza ya May 2018. May 2018. Question number 3. May 2018 question number 3. Nikupatie shortcut haraka hizi vitu kwanza upite. Hiyo nyingine sasa tutakaa tuongee baadaye. May 2018 question number 3. Are we there? May 2018 question number 3. Are we there? May 2018 question number 3. Tuko hapo ama tuko? May 2018 question number 3. May 2018 question number 3. Akia waseme yes ama no. May 2018 question. We are here. Thank you very much. So May 2018 question number 3. Required consolidated statement of comprehensive income for the year ended 30th April. B. Consolidated statement of financial position as at 30th April 2018. Na kufanyia swali I'm so sure mlifanya kwa darasa, lakini mine ni kuonyesha kwamba this is a doable question and I should be able to do it in 30 minutes. If I start doing a consolidated question for more than an hour, utaanguka exam. Utajibu maswali za theory zote. Page number 148. Page number 148. Actually, it's page 147. So you're told the following financial statements relate to RADI Limited, the investor entity, and the two investee companies which also operate in the same industry as the investor entity. So tuko na RADI, Mvua, na tuko na Upepo. I can see statement of financial position, statement of comprehensive incomes. So wanasema on 1st January 2018, on 1st January, it's question number 3, I mean, question number 3. Question number 3. On 1st January 2018, RADI Limited acquired 80% of the equity shares of Mvua Limited. Lokai cheza kama wewe wapatie hiyo question. What has happened? What happened there? I thought I'm the only one whose video is pinned. Okay. So we have here 1st January, we are told RADI acquired. So we are told here RADI acquired who? RADI acquired 80% of Mvua Limited. Mvua, 80%. So automatically Mvua is a subsidiary. Mvua is a subsidiary. Yes, reconstruction is a serious topic in AFR. Yes. So RADI acquires Mvua, 80% of Mvua. Asante sana. Sasa, which date? 1st January. 1st January 2018. So this is the date of acquisition. So date of acquisition is 1st January 2018. How about date of financial statements? Date of financial statements, I can see there, it is 30th April 2018. 30th April 2018. So they are in between. Could you kindly give me how many months are we talking about? Zihesabu tafadhali kutoka Januari woye. Januari mzima, February, March, April. 4 months. 4 months. This is very important. Haya, unaendelea kusoma note number 2. As at the date of acquisition, wachana na hiyo, natafuta ya Upepo. Still note number 1, Wanasema mahali that Rally Limited had earlier acquired 2.4 million shares of Upepo Limited on the Securities Exchange at a price of shillings 1.5 per share on 1st November 2017. So again, we have in this case here Rally having acquired another company called Upepo, and for Upepo, they only acquired 2.4 million shares. So I need to know Upepo has got how many shares in total. Please go to Upepo. Go to the statement of financial position Upepo, ordinary shares za Upepo ni ngapi in total? Ordinary shares za Upepo ni ngapi? Juliet ameshaiona kwa umbali, ameonea kwa golf hole number 18. 6. Thank you very much. 6 in million. Remember, this is a million, this is a million. Umekwambia pale 6,000, please umekwambia kwamba par value is 1 shilling. The par value is 1 shilling. So 6 divided by 1, you put a number of shares. Mimi najua nyinyi mnajua sana maneno, mnajua kusema knows. Number of ordinary shares, you take, ladies and gentlemen, you take the share capital given in the question divided by par value. So Ken amesema ni 60%. Ken umetoa 60% wapi? Ken ni 40% associate. Ni 40% associate. Aya. Kuna msichana anaitwa Eunice, anasema tumemwacha hana question. Eunice, question imekuwa shared hapo, huku uiona namna gani Eunice? Hebu share question kwa group ya WhatsApp. Eunice, question imekuwa shared mahali hapa na Lokai, huku juu kabisa. Kuna mahali Lokai alishare question. Hebu saidia mwalimu kushare kwa group. I don't want to multitask. Saidia mwalimu kushare kwa group tafadhali. And you let me know whether you guys have been able to share. Let me know whether you guys have been able to share. Let me know whether you guys have been able to share this in the group. Pata potea. It's an associate, yes. It's an associate. But I know you guys also appreciate the concept of IFRS 10. At times, these guys here would want to cheat you. How do they cheat you? They tell you that it's 40% fine. But they go ahead and tell you that this company has been given a chance of appointing 4 out of 5 directors. 4 out of 5 directors, then it means that these are the guys who are holding the bull by its horns. They're the guys holding the bulls by its horns, right? They're the ones who are in control. But of course, in CPA, they rarely do that. In CPA, they're still working on what working with. They're still working with just numbers most of the times. So has that thing been shared on WhatsApp? I want to know. Has that thing been shared on WhatsApp? Oh yeah. Bado. JK ameshare tena hapa. Eunice, there is a way you can just click on that document that has been shared there. Inaenda kwa machine yako. Lakini problem ni kama unatumia simu. Kama unatumia simu, it becomes an international disaster. JK, how I wish you could just take that thing from there. You share on WhatsApp. You share on WhatsApp. Nilikuonyesha 1, 2, 3. Hata upige tu picha hiyo revision kit, weke kwa hiyo. Got it. Great. Thank you very much. Thank you very much. Aya, sasa ukishajua hii ni associate, what do you do? Ukishajua hii ni associate, what I'll do if I'm the one, ladies and gentlemen, doing this exam, nikishajua ni associate, Upepo ni associate, na kuja kwa karatasi yangu namna hii, kwa hii column ya associate, hii column ya Upepo hii, sijui unaiona hii column ya Upepo. Column ya Upepo una cancel kwa past paper yako. Column ya Upepo una cancel. Unakuja pia unaenda kwa hii statement of financial position, kama ni associate, we don't consolidate associate, una cancel. Una cancel namna hiyo. Osha cancel yako hivyo kweli? Associates unazitoa because you don't consolidate associates. Ume cancel yako ama bado? Ume cancel yako hivyo ama bado? Usijali at revision kit hapana. Hiyo revision kit hautaitumia next semester. Hataki kuwe safi. Na mimi najua utaki kuuza. Pata potea, pata potea, pata potea. Yes, we don't want to use this kits next semester. Next semester zini ma-CPA Kenya. Haya, usha cancel tayari. So kwanza tuachane na hiyo. Hata mimi sitaki kuangalia mambo ya associate sana. Mimi najua mahali marks yote takuja. Mimi najua mahali marks yote takuja. Haya. Oh, invigilator by the way wameleta new rule. Hawataki uandike kwa So, tuanze consolidation. We are only consolidating the parent with what here? The parent with its subsidiaries. Associates, whatever, unaachana nazo nje. Haya. Sasa unaandika hapa, usianze mambo mengi sana. Unakuja unaandika title, unasema Radi. Unasema Radi Group. Consolidated statement of comprehensive income for the period ending whatever you unajua sana. Unaanza na revenue. So revenue unachukua ya parent plus ya nani somebody. Parent plus ya nani ya subsidiary mvua. Yes, Kariki anauliza, explain if the associate appoints 4 out of 5 directors. Do we consolidate the associate? What will be your take on that? Can somebody first of all pause a little bit and answer Aurelia? Perhaps Aurelia ameguzwa, ameona inaweza kuwa kwa mtihani. Yes. So long as they're in control. If you're told that they have got a significant influence, and then of course they are able to do what here? To control the operations of the entity, then that automatically defines control. And if it's control, then you have to consolidate. It will not be called an associate. It will not be called an associate. It becomes now what here? It becomes a subsidiary. Yes, the parent has de facto power. I like that. So revenue, unachukua straight away a Radi 92,500 plus ya mvua 48,000. Usichukue calculator tafadhali. Unakuja unasema cost of sales. So cost of sales unachukua ya parent 7,500 plus ya subsidiary 36,000. But kumbuka subsidiary haikuwa yako mwaka mzima. Subsidiary ilikuwa yako tu miezi ngapi somebody? Miezi 4. Subsidiary ilikuwa yako tu miezi 4 mwaka mzima. Kwa mwaka mzima subsidiary ilikuwa yako for only 4 months. 4 months. Usichukue calculator. Don't do that. What a space hapa ya gross who? What a space ya gross profit? What a space ya gross profit? You unawatana na space namna hiyo. Unakuja unachukua something, you are following the statement given there. Tuko na distribution expenses. So distribution expenses, unakuja hapa unachukua 2,500 plus 1,200 times 4 over 12. I hope you guys remember where we got the 4 from, right? From there, tuko na administration expenses. Ukichanganyikiwa uanze kuleta information ya associate hapa, woye. So administrative expenses, admin expenses, wanasema ni 55 na 2,400. 5,500 plus 2,400 times 4 over 12. Next ni finance cost. So finance cost, hiyo ni 100 peke yake, haina mambo mengi. Unawacha profit before tax. Profit before tax. Unaweza ukaacha ka space kadogo akuja kuweka hapa associates profit, ngao utaandika tu working, ukaambia examiner akajifanyia nyumbani kama utapata time, isn't it? There's some workings will not do. There's some things will not do. If you want precision, trust you, utaanguka sana hii paper. Unakuja hapo unasema income tax. Unachukua income tax, unachukua 3,900 plus 1,600. This has to be prorated times 4 over 12. Unakuja hapa unasema comprehensive income. Other comprehensive income Kuna revaluation. Hapa kuna revaluation inakuwa 3 marks. Revaluation of land, revaluation of land. So revaluation of land, ladies and gentlemen, hata ni ya parenti peke yake iko tu hapa. Nasema 500. Hii tunaweza ka transfer huko kwa kona. Naweza ka transfer huko kwa kona kama final figure. So nimeanza ku earn mark hata kabla ya kufikiria sana. Nimeanza ku earn mark hata kabla ya kufikiria sana. Haya, sasa before uanze adjustment yoyote, ni vile sina space ya kutosha. Before uanze adjustment yoyote, because the examiner also wants the balance sheet, unakujanga hapo kama unaandika RAD group, consolidated what year, statement of financial position. Pia una consolidate the same way. Hebu tujaribu tuone kama itatosha space. Tujaribu tuone. Hapa unakuja yako kuna space kubwa sababu unaendelea. Right? Unaendelea. Haya, so nitakuja hapa niseme RAD group. RAD group, consolidated statement of financial position as at, like that. Tunaanza straight away na non-current assets. Non-current assets. So unafuata ile ambayo umepatiwa, unafuata exactly. Wewe ni mwanafunzi mtiifu kabisa. Non-current assets, wamekuambia kuna property, plant and equipment, PPE. Now this PPE, ladies and gentlemen, kuna 18,300. Wewe unakuwa tu mtiifu kabisa. Hakuna mambo mengi. Una copy tu 18,300 plus ya mvua 18,900. Lakini please mashetani sikuingie uanze kusema 8 times 4 over 12. Kumbuka statement of financial position is at the end of the year. So as at the end of the year, this 18,900 was yours fully. So you don't prorate the balance sheet items. Now, this investment, of course, this investment here will be investment in associate, now investment in a subsidiary. So if it's investment in associate, of course, this will have a line, investment in associate, which I'll be able to account for using equity approach. If time allows, if I'm the one, I'll not even do it at all, not unless I don't have anything to do on the other side, right? Then I have here, instead of saying investment in goodwill, I'll have here investment, or rather investment in something, I'll have goodwill. So that is okay, non-current assets. From there now we go straight out to the current assets. So we go to the current assets. So current assets, what do we have under current assets? Under current assets, ladies and gentlemen, I have uzuri wa hii approach, sasa kidogo niongee ukiendelea copy. Uzuri wa hii approach ni kwamba examiner akisema kengela ngo time imeisha, imebaki dakika 5, what will I do? I'll get my calculator na add direct nikiandika. Haya, nikifanya namna hiyo, some of these things zinakuwa correct as takangi adjustment yoyo, actually most of them. Na utaona hata ukiangalia marking scheme ulikuonyesha last time marking scheme, hata utapata revenue kwa marks 2 na ingine kwa marks 1. Unaona zote ni mark 1 mo. Kama distribution cost sana sana haita change. Admin perhaps could change because of the goodwill impairment, right? Depending on what you are told, right? Lakini kama finance cost haita change, income tax haita change, or marking scheme ya last semester I'll be able to share with you Aurelia after this. Great. So tuko pamoja sasa, tuko pamoja. Lakini kitu sijui kama tuko pamoja kama Jubilee ama kama NASA. Inventory. Hii hakuna pamoja, yote iko hapo. Inventory 5,200 plus 1,000. Haya, kutoka hapo sasa kuna trade and other receivables. So we have receivables, ladies and gentlemen, receivables. What do we have here under receivables? 4580 plus 4580 plus who? Plus 800. Unaendelea mbele hivyo tu, unakuja hapo unasema cash at bank. No. Kuna financial assets at fair value. Hiyo ni rahisi sana. Financial assets. What do I have for financial assets? I can see I have 1,200 and 350. 1,200 and 350. From ladies and gentlemen, I can see I have cash at bank. So cash at bank, what do we have here for cash at bank? 1520, 250. 1520 plus 250 namna hiyo. Alafu sasa kuna equity and liabilities. So we start with equity. Equity, we start with the shares. So shares, this one we know we only take the one of the parent only. Parent only. Then we have revaluation PPE, revaluation PPE. Great. Then we have other equity reserves, other reserves. Then we have got retained earnings, and then of course NCI will come there. Yay! I've seen one member of UDA. After this class, we'd want to discuss with him to see whether UDA means well for Kenya. After your exams, I'll invite you somewhere. We discuss this politics. We discuss the politics. Mimi sina space. So sababu sina space, ningetaka kusoma hizi vitu haraka haraka. Ningetaka nisome hizi vitu haraka haraka ndio niweze kutoa hii space ya income statement. Hii note 1 na note 2 sitakuja kunisaidia baadaye mambo ya goodwill and whatever. Right? Note 2 ni mzuri sana. Note 2 anasema, as at the date of acquisition of the shares in Mvua Limited, the fair value of Mvua Limited's assets were equal to their carrying amount, with the exception of property, which had a fair value of 1.2 below its carrying amount. This property had a remaining useful life of how many years? Of 8 years. So, ladies and gentlemen, could you kindly help me? What do you think is being tested there of us? Please help me. What do you think is being tested there? Fair value adjustment. I like that. Very good. Ladies and gentlemen, this one here is a revaluation downwards. It's a revaluation downwards. Our market value, our assets market value imeenda chini than the carrying amount. So meaning that our assets here are overstated. So then the adjustment here will be just go to the assets amount, you subtract what there somebody, you subtract 1200. Remember, we are used to adding, because in most cases they tell you that the fair value is more, but here they have told us the fair value is lower. If it's lower, then it is what here somebody? It is a revaluation downward. So knock the figure down. And then, ladies and gentlemen, come and give us this depreciation of this amount. So please go ahead and give us that depreciation. So depreciation itakuja ngapi somebody? Depreciation itakuja ngapi? Depreciation wametupatia useful life. Wamesema useful life ni ngapi somebody? Wamesema useful life ni miaka ngapi somebody? Wamesema ni 8 years, 8 years, is that right? So what is 1200 divided by 8? 1200 divided by 8. 1200 divided by 8, 150, isn't it? But now remember, this is a whole year's depreciation. Mvua was not yours for a whole year. Mvua wasn't yours for a whole year. Mvua ilikuwa yako miezi ngapi somebody? Mvua ilikuwa yako miezi ngapi? 4 months, isn't it? Mvua ilikuwa ni yako 4 months. Mvua ilikuwa yako for 4 months. Right? So nakuja unasema hapa times what here somebody? Times 4/12. So ukisema times 4/12, then what depreciation are we looking at? We're looking at a depreciation of 50. So hata bila kufikiria sana sijui ati depreciation under charge, unajua hii figure na the depreciation amount you have lazima zikuwe namna gani somebody opposite. Because ordinarily, what do we normally do? If it's a revaluation upwards, hebu nisikize kidogo. Whenever it's a revaluation upwards, whenever it's a normal revaluation, what do? We normally increase our assets and then we deduct depreciation. Remember our normal rule with depreciation, our normal rule with depreciation on fair value, we normally subtract from PPE, add it to cost of sales into the normal. Whenever we get a normal revaluation of a PPE, go to your group, or rather depreciation on that revaluation now. Go to your group financial statements and subtract that depreciation from PPE, because depreciation means what? Loss in value. And then we go to our cost of sales and do what here, somebody? We normally add, because it's an expense. It's a cost of sale. We add. But now here things are opposite. So when they are opposite, what do? Now we'll go to our property, plant and equipment, add it there. So the the same map plus what here, somebody? Plus 50. After all, mwalimu alinifunza aliniambia hizi na wanga opposite. Easy. Right? Na ukienda kwa cost of sales, utasema namna gani? Mara kwanza kwa umesema hapa add to cost of sales. But now here we shall come and do what here, somebody? We shall come and subtract. Please remember, these figures are in thousands. So it's supposed to be 50,000. 50,000. So this one is supposed to be, tulisema ni 12. Hebu angalia vizuri, hizo figures zilete taabu. So it is 1.2 million. It's supposed to be 1,200. It's supposed to be 1,200. 1,200 like that. Our figures are in thousands. We have to be consistent like that. Sijui kama hapo tumeelewana kiasi. Because ordinarily, si tumezoea wakati ambapo revaluation is being done up. But now here it's down. So it's down, now we do the opposite. If I were you, I would have said depreciation on fair value. Depreciation on fair value, always add to cost of sales. Add to cost of sales. And deduct from PPE. Deduct from PPE. That is the normal. That is the normal entry. But now in an abnormal situation where evaluation is downwards, we do the opposite. We do the opposite. Yeah. So wanasema, Doricas anasema 50, not 50,000. Are you sure, Doricas? Are you sure, Doricas? Doricas, are you sure? It's good to be 1.2 million. Nebu angalia vizuri. Lokaya amesema pia yes 50. Yes 50. It's 50, yeah? 50. Remember our figures are in shillings thousands. So the 1,200 you guys gave me, the 1.2 million. 1.2 million in thousands, inafaa ikuwe namna gani? Inafaa ikuwe 1,200. Right? So if it's 1,200, yes. Yes, 50. Thank you very much. So 50. Thank you very much. Now tunaendelea mbele, hebu angalia note number 3. Note number 3. The group policy is to revalue all properties to current value at each year end. On 30th April 2018, the value of Mvua Limited's property was unchanged from its value at acquisition. But the land element of Radi Limited's property had increased in value by 500, as shown in other comprehensive income. So what do you think shall we do with this 500, ladies and gentlemen? What do you think shall we do with this 500? Sat naongea. What do we do with this 500, ladies and gentlemen? What do we do with that 500, ladies and gentlemen? Pata potea. Shall we include it, or it's already accounted for? It's already recorded. If it's in the comprehensive incomes, it's already recorded. Go to number 4. We are told sales from Mvua Limited to Radi Limited in the post-acquisition period were 4 million. Now, ladies and gentlemen, remember Mvua and Radi are serious relatives. And if they are serious relatives, they're not supposed to trade with each other. Whenever they trade with each other, it's just like how we can move inventory from a parent company to a subsidiary. So then we have this 4 million, which needs to be cancelled out. It's a fake sale. So what do we say about any intra-sales? Intra-sales should be done what, somebody? What should we do with intra-sales? What should we do with intra-sales? Internal sales. Sales between apparent and, yes, less from sales and the cost of sales, yes. So less from sales and the cost of sales. So we are told here sales from VOA Limited to Rad Limited in the post-acquisition period were 4 million, so 4,000. So utakuja kusema minus 4,000, minus 4,000. And then very fast, ladies and gentlemen, you'll be able to remember that whenever there is an intra-sale, there should be some UPS. There should be some UPS. So can you kindly calculate for me the UPS here? Kindly calculate for me the UPS here. Kindly calculate for me the UPS here. UPS. Itakuwaje UPS hii sasa? UPS itakuwaje? UPS itakuwaje hapa? UPS. Unrealized profit on stock. So unrealized profit on stock, ladies and gentlemen, unrealized profit on stock, unrealized profit on stock, unrealized profit on stock, B anasema ni 800. B anasema ni 800. Wametuambia 800, 400, pata potea, unrealized profit on stock, unrealized profit on stock, unrealized profit on stock. Julia amesema ni 400 pia. 400, great. So look at it this way. You know, for us to be able to get, ladies and gentlemen, UPS, we normally take UPS. We normally take profit margin times remaining intra-sales, remaining internal sales. So whatever they have given us there is markup. Wametuambia markup is 25 over 100. So nikitaka kama ni markup 25 over 100, mimi najua profit margin iko na bigger base. So margin iko na bigger base. So ndio niseme hapa plus 25. Kwa hivyo itakuwa 25 over 125. Which sister has been able to tell us is the same as what here somebody 1 over 5 times remaining intra-sales. The remaining intra-sales. You have to be careful usitumie cost hapa. Kama unataka kutumia cost hapa tumia markup. Right? You must be very careful. So unakuja unasoma pale wanatuambia Mvua Limited made a markup of 25% on these sales. As of 30th April 2018, Radi Limited had 2 million at cost to Radi. So kama ni cost to Radi, then to the company that sold, this amount must be sales. It's cost to Radi. The one that bought, it's a cost to it. But the one that sold, these are selling amount. So in this case here, we are correct. It is 2 million. So then what is a fifth of 2 million? Don't use 2 million, 2,000. Our figures are what here in terms of thousands? 400. Thank you very much. So what is the simple rule on this UPS? What is the simple rule on this UPS? Once I get UPS, you add it to cost of sales, and then you less this amount from inventory, because inventories are overstated. Inventories are not supposed to be having what here? Profits. So go to your group inventory, useme minus 400. But kwa cost of sales, unasema plus what here somebody? Plus 400. You add it to cost of sales and the less from inventory. Less from inventory. You less from inventory. Less from inventory. You're progressing on well. 5. In April 2018, Radi Limited sold goods to Pepper Limited for 2 million. These are a transaction between a subsidiary and what here apparent. Unaiwacha kwanza. Naeka star, ndarudi kwake baadaye nikifanya accounting ya associates ambao hata si lazima. Mimi nataka kuonyesha njia ambayo utapita kitu kwa haraka. Yes. Una next. Radi's Limited investments include some available for sale investments that are increased in value by 300,000 during the year. The other equity reserve relates to these investments and is based on their value at that date. There were no acquisitions or disposals of any. We'll come back to that. The other note ambayo ningetaka tuangalie kwa sasa hivi ni note number 9. Number 9 for now. ambayo inasema Radi Limited owed Mvua Limited 100,000 as at the year end with regard to transaction note 4. So this 100,000 is an internal owing. What should we do with it? It's an internal owing, which all of us appreciate that it's a fake owing. It's a fake owing. So what should we do with it? Kama saa mama nilikwambia kitu mara mingi sana. Mama mzee amekwambia nipea 40,000. Ukimpatia inafaa umfuate ati mwisho mmoja akurudishie. Kumbuka ni internal transaction. Inafaa umfuate kweli atakurudishie. It's a family transaction. Chako ni changu. Right? Right? So wanasema this amount, because it's fake, less from receivables and the payables. So go to the receivables. Unasema hapa minus 100. Na pia kwa payable yangu si na payable. Tafuta mahali payable unasema minus 100. Because one company is saying, I expect to receive. The other company, I expect to pay 100. So both are fake transactions. So go to the payable, subtract. Go to the receivable, subtract. Now, ladies and gentlemen, very good. Is there any cash in transit here? Is there any cash in transit? There is cash in transit. We are told that the books of Radi Limited, however, showed that it owed Mvua Limited only 80. There is cash in transit. There is cash in transit. The books of Radi Limited owed, however, showed it owed Mvua Limited only 80,000. So what is the cash in transit there? What is the cash in transit there? What is the cash in transit? What is the cash in transit? What is the cash in transit? 20, isn't it? 20, yeah. So once you see cash in transit, you as a bright student of AFM, what should you do? You as a bright student of AFM, cash in transit, what should you do? When you see, add it to cash in bank. Because you see, parent aioni na Mvua ishawaachilia. Whichever. So the first thing, whenever I see cash, whenever you see cash in transit, ladies and gentlemen, always come and add it to cash in bank. Cash in bank. Useme hapa plus what here somebody, hiyo ni mark ya bure, plus 20. Plus 20. Lakini unajua pia kuna another adjustment then. If there is cash in bank, there is another adjustment. Because you know, one thing you're supposed to know is that Radi owed Mvua Limited how much here somebody? 100 million. So Radi owes Mvua Limited 100,000 at the year end with regard to this transaction in November, note number 4, I mean. The books of Radi Limited, however, showed that it owed Mvua Limited only what here somebody? 80. So meaning that the intra-payable is supposed to be 80 and not what here somebody? 100. Because the payable. So go to your payables account. In the payables account. So kwa payables, kuna mara kumesema minus 100. Nakumbuka minus 100 kwa payable. Nakumbuka kwa payable intra-group, ulikuwa umesema minus 100. So it is either uvute uweke 80 because that is the internal payable, ama useme hapa plus the cash in transit. Yes, receivables are 100, the internal receivable 100, payables ni ngapi somebody? Ni 80. Payable ni 80. Payable ni 80. Payable ni 80. Minus 80. Either way, tukiangalia sasa mingi zinakuambia either that cash in transit you take it to the group cash at the bank alafu na add kwa payables. Either way like that. Wewe kazi ni kusonga mbele, kazi ni kusonga mbele. Ladies and gentlemen, I'm so sure ukiwaachia tu hiyo swali hapo acha nikwambie. Ukiachia tu hiyo swali hapo hata bila mambo mengi ya goodwill na nini. Ukuje tu utafute hizo vitu figures zako uweke. Trust you me, utapata marks mingi sana over average. And then you will be ahead of the rest because over 80% of the students in CASNEP, section 6, hawafanyangi swali ya consolidation. Na akifanya ni madogodhani, wanaweka vitu hivi. Ukifanya mpaka hapa, utakuwa mzuri sana kwa macho ya examiner. Utakuwa mzuri sana kwa macho ya examiner. Thank you very much, ladies and gentlemen. We have another paper called Advanced Financial Management. So ndakutumia notes za related party kwa group, uendelee kusoma tafadhali. Otherwise, it has been a pleasure hosting you. Tuonane tena kesho. Na kesho tutakuwa na masaa mengi because kutakuwa na any other paper. The students who want us to look at advanced auditing, but I think that one was very well covered with my colleague. Yes, we have AFM. We have AFM right now. Hiyo tutafanya cash flow pia shortcut kesho. Yes, don't worry, all these things will be done.